Hello and welcome to the Pirls Stock Market Commentary video featuring the proprietary bull-bear point and figure market breadth summary chart for December 11th, 2016. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 1.84 rose from 1.30 last week, advancing within bullish territory. The total count of securities in bullish or bearish patterns increased 4% to 3,248. The count of bearish stocks decreased 16%, while the count of stocks in bullish patterns increased 19%. The Pirls PNF Market Breadth Summary Chart shows us a market now 5 weeks in bullish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To subscribe to the weekly Pirls Stock Market Commentary via email free of charge, simply enter your email address in the space provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 205 points for the sixth advance in 17 weeks. At a positive 361.89 points, it has risen above the November 2014 and March 2015 tops, and continues below all the remaining two tops above plus 100, as well as continuing above all 6 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 4 accumulation days and 3 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq ended in neither accumulation nor distribution mode on higher average daily volume. Momentum, now at a positive 141.16, up from a negative 21.24 a week ago. The CCI 20 daily at Monday 12/5 close formed a zero-line reject long entry signal inside the plus or minus 50 range. We will follow the results of this trade simulation in next week's commentary. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 32 weeks ago, while the daily CCI 20 began a Woody's uptrend 3 weeks ago. The CCI 20 weekly has risen to a positive 182.53 from a positive 92.9 last week. We exited the Woody's zero-line reject long entry trade signal begun at Friday 11/11 close, when the CCI 20 weekly dropped below plus 100 at Friday 12/2 close. The result of this trade simulation was a gain of 2.69 points on the Nasdaq Composite, or 47 cents per share of QQQ. The CCI 20 rose following the trade exit and is now outside the plus or minus 50 range for a new long entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and 2 of the bottom 5 are negative. Summary: oil, oil services, and banking on top. gold and silver, and some tech on the bottom. Bullish, KBW Bank has entered the top 5. Gold and silver has left the top 5 and has entered and leads the bottom 5. Disk drives and comp hardware have left the bottom 5. Bearish, oil services and oil continue in the top 5. Comp tech and semis continues in the bottom 5. Focus this week from Max Slavo's www.shtfplan.com. Moving backward, despite claims of a recovery, quote, economy is in reverse, end quote. The following are some key points. The middle class is still struggling for something tangible, but things remain pretty frustrating for most people. Via the Washington Examiner, a new report on the economy finds that productivity growth is at a 50-year low, and that much of the positive talk about the nation's financial situation in the last election, much of it coming from the administration, was a lie. The report makes clear that Obama administration propaganda and media claims that a recovery is underway were carefully coordinated lies. Quite simply, there is no recovery, and things are getting worse all the time for America's swelling numbers of working poor. The study finds there is no recovery. Since 2007, U.S. GDP per capita growth has been 1, according to Gallup chairman Jim Clifton. Quote, productivity growth is in a serious multi-decade-long slump that is dangerously close to stalling completely, end quote. The executive summary hits the worst of the news. Quote, the people are right. The economy is not working well. But the problems did not start with the Great Recession. For decades, the nation's income, measured as GDP, has barely grown overall. On a per capita basis, median household income peaked in 1999. The subjective general health status of Americans has declined, even adjusting for the aging population. Disability rates are higher. Learning has stagnated. Fewer new businesses are being launched. More workers are involuntarily stuck in part-time jobs or out of the labor force entirely. And the income ranks of grown children are no less tied to the income ranks of their parents, end quote, said the report titled, No Recovery, an analysis of long-term U.S. productivity. Federal Reserve monetary policy has made systematic changes that will be hard to undo, but the glut of cheap money has become ineffective and officially recognized as counterproductive. The American middle class has been washed out. Their collective dreams have been discounted, and their very way of life has been threatened and taken out from under them. While you were snoozing, the bankers took charge, and they sold you a lie to keep you passive and submissive. Thank you for watching this week's Sand to Pearls Stock Market Commentary video featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a productive and prosperous week coming up, and wishing you true success.